Hey, how's it going, everybody? I'm back with another episode of the SimpMe Current Event Series. First and foremost, if you're new, be sure to subscribe to our YouTube channel so you can stay updated on all of our new content. So the last few days have been some of the most chaotic and turbulent trading days on Wall Street. This is pretty nuts to imagine considering all the wild events that have been taking place over the years. So let's dive into what went down. As many people are aware, Gamestop, as well as other stocks like AMC, Nokia, Bed Bath & Beyond have been front page news. Since COVID began, these companies have been easy targets for large hedge funds that manage billions of dollars. The reason being is that COVID has negatively impacted growth in sales for large retailers like GameStop. Because GameStop is located in retail locations that have seen less traffic over the course of the past year, the firm was close to facing bankruptcy. Now, this is where the story gets really interesting. You may be asking yourself, if GameStop is not earning any income and the firm is being negatively impacted by COVID, who in their right mind would invest in these stocks? What essentially happened is that these large billion-dollar hedge funds decided that they would short GameStop stock. For those who may have never heard of a short sale, it is when a trader sells securities that they do not own with intentions of repurchasing that same stock in the market once the stock decreases in value. This is known as covering the short. These large hedge funds will essentially borrow the stock from a larger brokerage firm in order to execute the transaction. Once the hedge fund covers their short and repurchases the stock in the market at a lower price, they will return the borrowed shares to the larger brokerage firm or financial institution. The hedge fund then pockets the spread, and when you are executing trades with billions of dollars, the gains can be astronomical. However, the huge profits can only be yielded for the hedge fund if the stock price falls. The craziest part about this scenario is that the hedge funds never anticipated a revolt that was brewing within the Reddit community. Reddit is an online forum where individuals can share information across a variety of topics. There happens to be an insanely large community of retail traders on Reddit that follow a page called Wallstreet Bets. Wallstreet Bets decided that they were going to get the entire community to challenge Wall Street and all the billionaires that have been profiting off of short sales for decades. They executed this strategy by purchasing GameStop within their Robinhood, TD Ameritrade, and Fidelity brokerage accounts. These huge volumes of trades in turn caused the price of GameStop to explode, and the hedge funds were losing billions of dollars by the day. Retail investors were pocketing thousands of dollars, while the hedge funds, who were banking on the GameStop stock to plummet, lost insane amounts of capital. The hedge funds were in turn forced to close their short positions at higher prices because of the revolt led by the Reddit community. Quite frankly, nobody saw this coming, and let's just say Wall Street was furious. Just when you thought the situation could not get any crazier, it did. Robinhood, which is one of the largest brokerages in the market, decided that they were going to prevent retail investors from being able to buy new shares of GameStop. Any existing investor in GameStop could log into their account and sell their positions, but they could not buy new shares. In addition, no new investors could jump on the bandwagon. As a result, GameStop stock began to plummet, and this allowed all of the hedge funds that shorted the stock to make their money back. As one would expect, Wall Street Bets, Twitter, and the entire retail investment world were not happy with this news. People were angry to learn that Robinhood would prevent retail investors who would like to make money within a capitalistic society from buying shares. Robinhood has in turn received severe backlash from millions of investors, and this current situation is still playing out right before our eyes. Wall Street Bets is doubling down, and this could lead to class action lawsuits for Robinhood. In addition, politicians have expressed outrage regarding the situation, and Congress may get involved. One thing that this situation has shown the world, and Wall Street especially, is that the internet is an extremely powerful force. Wall Street Bets and the Reddit community are not showing signs of backing down, especially after the recent standoff. It will be really interesting to see how this situation continues to play out, but best believe the good people over at SimpMe will keep you updated. So I hope you all found this segment of the SimpMe Current Event Series interesting, and be sure to stay tuned for more content. Also, check out our website today at www.simpme.com to explore our analogies. Thanks.